the tariffs hit right away, right? But the tariffs aren't paid until the goods are imported. And if you noticed, our trade deficits in the US for the past few months have been off the charts. And so what I think is that a lot of companies saw the tariffs coming and they ordered some inventory. So they have to work that inventory off first. So those products can be sold without the tariff. Now, I think they will raise prices somewhat because they realize that this is their last chance to make money. Because once they run out of those goods, they have to pay the tariff on the new goods, and their customers probably will be priced out of the market, a lot of them. So you'll start to see some initial increases in prices, but it won't fully hit until they run out of stuff. And going to be a mad dash. I mean, some people are going to rush to the stores and, they're going to buy new sneakers, for example. Maybe they'll buy 3 or 4 pairs, knowing that, they're going to wear out. They'll want to get another pair. They're going to wear out because all those sneakers are going to get so much more expensive. So some of these companies, could see a rush of sales, now until they use up what they got. And then their business is going to dry up, substantially. We're going to be reversing a process that, has on the surface been benevolent, but it really wasn't if you understood it. But now it's going to be very sinister. See, what's been happening is we create inflation, printing money, we export it to the rest of the world, and they ship us the stuff that they make. So we have goods to buy and the money goes abroad. And so that keeps prices down and we get more stuff. Then the foreigners take the dollars they earn and buy our bonds, buy our stocks. That gives us lower interest rates and a higher stock market. So we get wealthier on paper, we get to borrow cheap, and we get all kinds of consumer goods we didn't produce, and they're low cost, right? What's going to happen now is all that inflation is now going to move from Wall Street back to Main Street. We're not going to have as big trade deficits anymore. So we're not going to be able to export as much of our inflation. It's going to stay here. We're going to have more money chasing fewer goods. So a big increase in prices. Foreigners are not going to buy as much U.S. stocks and bonds. So we get a lower stock market and a higher interest rate. So that's the reverse of what we've been enjoying, right? And so it's going to be the worst, thing for Americans because they're going to be getting poorer financially as their cost of living is skyrocket. And many Americans are going to lose their jobs. So we're going to go through the worst economy in modern memory. Now, I don't think anybody alive today has seen an economy that's going to be as bad as this one. Now, it may get better eventually. Maybe we get the benefits of AI and stuff like that. But in the short run, things are going to get very, very bad. And that's horrible for the Republicans because, Trump just blew them up. I mean, the Democrats were in disarray. The party was really in shambles, and this is going to galvanize them because Trump is going to be the villain that did this. They're going to be able to say he inherited a great economy, which he didn't, but then he destroyed it. And the Republicans are going to be out of Congress in the midterms. I mean, the Democrats are going to get the House and the Senate.
Well, if you haven't been paying attention lately, I don't blame you. Sometimes it feels like the economy is in a free fall, and nobody's willing to admit it. But let's take a closer look at what's happening, because the situation is about to get a lot more complicated, and it's important that we understand it before it all blows up in our faces. One of the key issues on the table right now is the impact of tariffs, and yes, they're going to hit us hard. You've heard about it. You've probably seen some of the headlines. The US has imposed tariffs on goods coming from other countries, most notably China, but also from other regions as well. The tariffs are designed to encourage Americans to buy domestically produced goods, but the problem is, that's not going to happen in the way people think. The tariffs don't hit right away. In fact, companies have had a little bit of breathing room to absorb the initial impact. Tariffs are only paid when the goods are imported, and so many businesses saw the tariffs coming and preemptively ordered stock. They've got inventory on hand, and for now, they're still selling that inventory without the higher tariff costs. But let me tell you, this is just a temporary cushion. Once these stocks run out, the real impact will be felt. Now, we're already seeing the early signs of this. Trade deficits have been growing like crazy. If you've noticed, the US has been importing more than it's been exporting, and that gap is expanding. Why? Because companies have been importing as much as they can before the tariff hits full force. Once that inventory is gone, the prices on a lot of these products are going to skyrocket. A lot of people think it's just about the trade deficit, but it's much more than that. It's about how we've been able to keep prices artificially low by outsourcing production and letting other countries take on the brunt of our inflation. Once the tariffs are fully in place, prices are going to rise, especially on imported goods. sneaker prices, electronics, clothing, you name it. And people are going to rush out to buy these goods now, while they can still avoid the tariff-induced price hikes. Some people might even stockpile a few extra pairs of sneakers because they know that after the inventory runs out, they're going to be paying a whole lot more for them. It's not just sneakers, it's every good we rely on, from toys to furniture to electronics. So here's the kicker. Once that inventory is exhausted, these companies are going to have to pay those tariffs on new shipments. The price hikes will hit, and that's going to push customers out of the market. Imagine you're in the store buying sneakers and the price has jumped up 30% in just a few months. Are you really going to spend that much more money for the same product? A lot of people are going to be priced out. This is where the inflationary shock starts to hurt consumers. But it gets worse, much worse. See, the real problem with the tariffs isn't just that they raise prices. The problem is that they signal a reversal of a long-standing trend that we've all grown comfortable with. We've gotten used to cheap goods, especially from countries like China, who've been able to produce items at a fraction of the cost it takes to make them here in the US. And for years, we've been importing that cheap stuff. But that's not going to last. The inflationary pressures from these tariffs are going to shift the burden of those higher prices back to Main Street. This is the shift that we've been ignoring for so long. We can no longer export our inflation. We can no longer send it overseas and pretend it's not a problem here. We're facing an environment where we'll have more money chasing fewer goods, and that's the classic recipe for high inflation. And let me tell you, inflation is a beast that's not easily tamed. Over the last few decades, we've lived in a world where we've been able to benefit from our trade deficits. We import cheap goods, get to spend less on them, and then we rely on the rest of the world to buy our bonds and stocks. This allowed us to keep interest rates low, and the stock market kept climbing. The American people felt wealthier on paper because their 401ks were growing, and they could borrow cheap money to buy homes and cars. But as the tariffs take hold, the inflation will come home to roost. The countries we've been borrowing from won't be buying our stocks and bonds as much anymore. They won't be sending their dollars into the US financial markets. The party is over. We'll see a stock market decline and higher interest rates as a result. That's a complete reversal of the situation that's benefited us for so long. And here's the ugly truth. Americans are going to get poorer. As inflation eats into their savings and wages fail to keep up, many will struggle to afford the goods they used to buy with ease. The high cost of living will make it harder to make ends meet, and many Americans will see their wealth evaporate right before their eyes. Moreover, the political fallout from all of this is going to be brutal. The Republicans are going to be in a tough spot because, unfortunately, their policies will be blamed for this mess. Donald Trump, who led the charge on tariffs, is going to be seen as the person who wrecked the economy. Whether you agree with his actions or not, it's hard to deny that the political landscape is changing dramatically. The Democrats, who were in disarray not long ago, will be able to use this economic collapse to their advantage. Trump's efforts to push America toward a more protectionist approach may have initially appeared to be a great move, but as this economy begins to buckle under the strain of higher costs, higher interest rates, and fewer jobs, the Republicans are going to lose the midterm elections. The Democrats are going to take control of the House and Senate, and the political implications of this will be felt for years.
I mean, gold is above 3,100. We're right near record highs. We set that record high last night, but gold's going up. It's going to keep going up. This is de-dollarization. It's just the central banks that have been driving it up. We haven't even gotten the real investor demand yet. That's coming. Retail investors in the U.S. are going to be buying gold, but they're going to be buying it at much higher prices. They're going to be buying silver too at much higher prices. This is a de-dollarization. The dollar is going to go down. I mean, today the dollar is down by over 2% against other fiat currencies. It's one of the biggest moves down in one day in the dollar that I can remember. One of the biggest ever. And this is just the beginning. So many people were predicting that the tariffs would cause the dollar to go up, and they thought that would take the sting out of the tariffs because, yes, we'd have to pay the tariffs, but we'd get to buy the foreign goods cheaper with our higher dollar. Well, instead, the dollar is falling, and that's going to augment the damage done by the tariffs. So not only are Americans going to have to pay tariffs on what they import, but what we import is going to cost us more because of the weak dollar. So, it's a double whammy. Well, right. Gold is just noise. It's just a bunch of trading going on today, the shakeout. Bonds are rising today, but I think that's temporary. I think bonds are going to fall because inflation is going to erode away their value, And a reduction of demand due to a weak dollar is going to lead to lower bond prices. And of course, as the US economy goes deeper into recession and we get larger budget deficits, that increases the supply of bonds to sell, and we have fewer demand for those bonds. Meanwhile, what no one's talking about is over the next 4 years, about 26 trillion of the 36 trillion national debt matures. So all that debt has to be rolled over. Who's going to buy that? So bonds are going down. The only thing that's going to stop that is the Fed going back to QE. But even that'll be temporary because that will create even more inflation, which is the worst thing for bonds. I think the dollar has been the source of our artificial economy. We've been able to live beyond our means because we can export dollars to pay for goods. I think that's the process that's going to be reversed. And Trump accelerated it with the tariffs. I mean, I think there's no question about it. That's what gold's telling you. I mean, what are central banks doing when they're buying gold at $3,000 and not buying treasuries? They're saying that we'd rather own this metal than get 4.5% yield on US treasuries. So they don't trust the treasuries because they don't trust the dollars. So they want to own gold. And this is a process that is still early and has a long way to go to play out. You can't price in risk that you don't perceive. That is the problem. The markets don't see how much risk there is. That's just like, you remember with the subprime market, which I was short for, the subprime market, they were pricing these bonds above par when in my mind they were worth zero. Now, why was the market pricing them? Because they didn't perceive the risks that actually existed.
So what does this mean for you? For everyday Americans trying to make sense of what's happening, the short answer is it's going to be tough. But I want to take a moment to explain why this is happening in the first place and why it matters to all of us. Because we're not just talking about higher prices or a weaker dollar here. We're talking about a fundamental shift in the way the global economy operates. We've been living in an economic environment where the US has enjoyed the benefits of a strong dollar, cheap imports, and low interest rates for quite some time. But the forces at play are pushing us in the opposite direction. For years, the US has exported inflation by buying cheap goods from other countries and paying for them with dollars. These dollars would then be recycled back into the US financial system through the purchase of US stocks, bonds, and other assets. That process has helped keep interest rates low, maintained relatively stable prices, and, crucially, stoked the illusion of economic prosperity. We've gotten used to a system where we can live beyond our means because, as long as the world keeps accepting our dollars, we don't have to worry about the long-term consequences. It's like we've been on a credit card binge that no one really wants to talk about. As long as we keep buying and selling goods, the system chugs along. But that's about to change. Now, as the trade deficit narrows and other countries stop recycling their dollars into the US economy, we're left with a serious problem. The excess dollars that were once flowing into the global economy are now staying put. The money that once went into US assets and helped prop up the value of the dollar is no longer coming in at the same rate. We can no longer rely on the world's appetite for US bonds and stocks to keep us afloat. This isn't just about a trade imbalance, it's about the disruption of a global monetary system that has allowed us to maintain our standard of living for decades. The world is changing, and it's happening right before our eyes. Let's break this down a little further. One of the key consequences of this shift is the impact on inflation. The US has been able to import inflation for years, thanks to the dollar's reserve currency status. We've been importing cheap goods from countries with lower labor costs, and those countries have been buying up US assets to recycle their dollars back into the economy. As a result, we've gotten the benefit of cheap consumer goods, a relatively low cost of living, and a rising stock market that made many people feel wealthier. But with tariffs being imposed, the flow of cheap goods is about to stop. And all of a sudden, that inflation that was once hidden overseas is coming back home. Now inflation is moving from Wall Street back to Main Street, and it's going to be a painful transition. We won't be able to export it anymore. We've been able to pretend for a long time that inflation wasn't a serious issue, but now the chickens are coming home to roost. The cost of goods is going to rise because we'll have to start producing more goods domestically or rely on more expensive sources for our imports. As inflation starts to rise, wages won't be able to keep up. Many Americans are already struggling with stagnant wages, and as the cost of living goes up, they will feel the squeeze more than ever before. More money chasing fewer goods, that's the recipe for inflation, and that's exactly what we're going to see. With fewer cheap imports flooding the market and domestic production lagging behind demand, prices will rise. It's a simple matter of supply and demand. We are already seeing signs of this in the form of rising costs for everyday goods like food, clothing, and electronics. And don't think it's just a short-term blip. This is the beginning of a long-term trend. You know what's going to happen next? Many people are going to start noticing that their purchasing power is shrinking. The dollars they earn will buy less. That's going to be the real wake-up call. We've become accustomed to cheap everything. But when the prices go up and wages don't follow suit, people will start to feel the pain in their pockets. For many, this will mean cutting back on non-essential spending, scaling back their lifestyle, and making difficult choices about what they can and can't afford. And let me be clear, inflation is not just an abstract concept. It's something that will affect people on the ground level. It's not some theoretical issue in an economics textbook. It's about real families who will have to make decisions like whether to put gas in the car to drive to work or buy groceries. It's about people who've been barely scraping by, and now they will be pushed even further into a financial hole. So let's talk about the stock market for a second, because this is another area where things are going to get messy. As the inflationary pressures increase and the US dollar starts to lose its strength, the stock market will decline. I know that many people are sitting on the edge of their seats, hoping for another rally, but it's not coming. Investors who have been betting on a continuously rising market are going to be in for a rude awakening. When the US loses its ability to export inflation and interest rates start to rise, the stock market is going to feel the pain. If foreigners aren't buying US stocks and bonds, we'll have to rely more on domestic buyers. And let's face it, the average American investor is not exactly in a position to keep the market afloat. This is why, as inflation ramps up, interest rates will rise as well. The Federal Reserve, in an attempt to control inflation, will have to raise interest rates. But raising rates is like a double-edged sword. On one hand, it may cool off some of the inflationary pressures, but on the other, it will make borrowing more expensive, slow down the housing market, and make it harder for businesses to expand. And here's the kicker. It's going to make the government's debt more expensive to service. As interest rates climb, the cost of servicing the national debt will skyrocket, which means the government will either have to raise taxes or run up even more debt to cover its obligations. The reality is that we are headed into a period of economic turmoil unlike anything we've seen in modern times. It's going to get ugly. And it's not just about the stock market and inflation. The broader economy will feel the sting. When interest rates go up and inflation pushes prices higher, businesses will face higher operating costs. Many won't be able to afford to operate at the same level. This will lead to job losses and business closures, especially in industries that rely on cheap labor and materials. The manufacturing sector will take a hit, as the cost of producing goods will rise, and many companies will have no choice but to pass those costs on to the consumer. And let's talk about the political fallout from all of this. The Republicans who have been in power are going to bear the brunt of the blame. No matter what you think about the tariffs or the policies that led to this mess, the reality is that the people are going to turn on the party in power. Trump, once seen as a populist hero, will now be viewed as the man who led the US into an economic disaster. The Democrats, who were in disarray just a few years ago, will rise to power as they capitalize on this economic crisis. They'll be able to point the finger at Trump, saying he inherited a great economy but destroyed it. The midterm elections will be a bloodbath for the Republicans, and we could see a complete shift in the balance of power in Congress. And that's where things get even more complicated, because if the Democrats regain control of the House and Senate, we're going to see even more government intervention in the economy, more regulation, more spending, more taxes, and none of it is going to solve the real problem. Government intervention, no matter how well-meaning, has never fixed anything in the long run. It only adds fuel to the fire. But at this point, it's almost a foregone conclusion that we're going to see more government interference as the crisis deepens. So where do we go from here? How do we survive in this new economic reality? The truth is, it's going to be a challenging time for many people. But there are ways to protect yourself from the worst effects. If you've been paying attention, you know that gold is one of the best ways to safeguard your wealth. Gold is a store of value that has stood the test of time. It's not subject to the whims of central banks or the volatility of the stock market. It's real money, something tangible that can preserve your purchasing power when everything else is losing value. I don't want to sugarcoat it. The next few years are going to be difficult. We're going to experience an economic downturn that will rival anything we've seen in recent memory. But those who are prepared, those who understand what's coming and take action now, we'll be in a better position to ride out the storm. In the meantime, keep your eyes open, stay informed, and don't be afraid to make tough decisions. The storm is coming, and it's up to us to figure out how we're going to weather it. And remember, it's always better to be prepared than caught off guard. Keep an eye on the changes happening in the global economy, because we're in for a ride that's going to shake things up more than most people realize.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.